What are the 5 best dividend stocks that guarantee a monthly income? In contrary to cash dividends, stock dividends are payments made to shareholders in the form of new shares. Each existing share gets paid a fraction of the distribution. For instance, if a business declares a 5% stock dividend, it will issue 0.05 shares for each share that a shareholder owns. 5 more shares would be given to the holder of 100 shares. Thank you for watching Diversified Streams, your go-to YouTube channel for all things crypto and finance. Be sure to check out our community post about these subjects. We are curious to know your opinions on these matters. Also, if you haven't subscribed yet, click the subscribe button so you don't miss out on the latest news and tips related to crypto. And make sure to keep your notifications on so you'll be updated with our latest videos. We frequently post so you wouldn't want to miss them. Transform your dividend stocks into a must-have for passive income seekers. Despite all the positive developments in recent years, some things haven't changed for the better. Mortgages, auto loans, and regular phone and utility bills are just some examples of the recurring expenses that we all have to deal with on a monthly basis. Paychecks arrive every 2 weeks while we're working, and even in retirement, we have social security to rely on. And if you're in the fortunate position to receive pension benefits, they'll likely be distributed on a monthly basis too. But our investing portfolios don't function that way. So, we need equities that pay dividends every month. Dividend stocks typically make distributions once every 3 months, while bonds make distributions twice yearly. Since dividend and interest payments tend to be made all at once, this can cause the smooth flow of money into and out of a portfolio to become more erratic. Stocks that pay dividends on a monthly basis can help you balance your income and expenses more easily. Rachel Klinger, president of Macon Wealth Strategies in State College, Pennsylvania, says the firm never advises clients to buy a stock solely for the purpose of receiving monthly dividends. However, stocks that pay dividends every month can be a welcome addition to a diversified portfolio because of the predictability they bring to an investor's earnings. For 2023, we will analyze the top monthly dividend stocks and present our top 5 picks. Since monthly dividend stocks are typically only found in a select few industries, like real estate investment trusts and business development companies, you may notice some overlap between the various options. These industries are more concerned with generating income than expanding their market share, and as a result, their average yields are significantly higher than the market as a whole. This is certainly welcome news, given the S&P 500's current yield of 1.7%. This isn't a comprehensive portfolio because the list isn't very diverse. This means that you should be careful when investing in stocks that pay dividends every month, but you should check out the companies listed below to see if any of them fit with your investment strategy. Now, without further ado, I'll go over my picks for the best 5 stocks paying monthly dividends in 2023. Number 1. Realty Income. Its market value is $39 billion. That yield on the dividend as of December 2022 was 4.7%. Realty Income, a conservative triple net retail REIT, has trademarked the term monthly dividend company as part of its official name, which suggests it may be the stock with the highest monthly dividends in stock market history. Although the price of Realty Income shares can be just as volatile as those of any other equity, the stock is about as close as the stock market gets to a bond in terms of safety and reliability of its payout. Its rental income is reliable because it comes from an empire of over 11,000 properties rented to over 1,100 tenants across nearly 80 industries and all 50 states. When economic downturns end, investors in Puerto Rico, the United Kingdom, and Spain look to buy high-traffic retail properties. In addition, our business is not threatened by Amazon or any other online retailer. However, Realty Income is very close to securing leases with its top tenants, which include 7-Eleven, Dollar General, and Lowe's. The portfolio has more than a quarter invested in food and beverage stores, which are typically resilient to economic downturns and, in some cases, even benefit from trading down during tough times. That's great news, as a recession in 2023 is looking increasingly likely given the inverted yield curve that persisted throughout much of 2022. Although Realty Income's yield of 4.7% is not massive, it is significantly higher than that of the market as a whole, and a ladder of 10-year treasuries, which yields only 3.5%. What matters more than yield, though, is the ability to reliably increase one's income over time. Realty Income is a proud member of the S&P 500 Dividend Aristocrats as of the end of 2022, having paid a dividend for 629 consecutive months and increasing its dividend for 100 consecutive quarters. While Realty Income's dividend growth rate of 4.4% since going public in 1994 is lower than the rate of inflation right now, it is well ahead of inflation over the entire period, and regardless of whether the Fed manages to get inflation under control anytime soon. Given its track record, Realty Income should be able to sustain dividend growth at a rate higher than inflation. Number 2. Gladstone Commercial, with a market value of $755.4 million. The yield on the dividend as of November 2022 was 8.1% for another gritty industry play considering the shares of Gladstone Commercial. Gladstone Commercial, like Stag Industrial, owns and manages a sizable portfolio of logistical and light industrial properties. Roughly 54% of its rental revenues come from industrial properties, with the remaining 42% coming from office real estate. The remaining 4% is made up of various commercial buildings. Only 3% of the population works in medical offices, while only 1% of the population has such a diverse set of interests. The wild volatility of recent years hasn't been too difficult to stomach. REIT has 137 properties in 27 states, with 112 tenants as of September 30th, 2022. The Gladstone Commercial portfolio has grown by 15% annually through careful planning and now boasts a 97% occupancy rate that has never fallen below 95%. Only 4% of its portfolio is occupied by its largest tenant, and of those, nearly 50% are publicly traded companies. Not a bad streak at all. Ever since dividend payments began in January 2005, Gladstone Commercial has been one of the few companies to pay them on time every month. Number 3. LTC Properties. It has a market value of $1.6 billion. The yield on the dividend as of December 2022 was 5.7%. To round out your traditional REIT portfolio, you may want to look into LTC Property shares. LTC is a real estate investment trust whose holdings are roughly evenly divided between senior living properties and skilled nursing facilities. It was obvious that residents of the REIT had it rough during the pandemic, as the heightened dangers made senior living and nursing homes less desirable. Moreover, the nationwide lack of available workers has served to heighten tensions. While it may take some time for the economy to recover to its pre-pandemic level of health, the region's long-term demographic trends are essentially unstoppable. As of the year 2023, LTC is a promising turnaround play, since most residents of senior living facilities are younger and do not require medical care. They are less affected by the shortage of workers and the fear of viruses. Moreover, they provide an alluring active lifestyle for many seniors, something that hasn't fundamentally changed for the vast majority of baby boomers. The benefits of investing in senior living properties are obvious for those who are now retired or have no children. Recuperating from the effects of skilled nursing care may take more time. There are a limited number of alternatives to nursing home care, though home care may be an option for many elderly people who require assistance but cannot afford or unwilling to move into a nursing home. Long-term demographic trends here are favorable to LTC expansion, which is crucial. Most members of the baby boomer generation are still relatively young and thus do not yet require long-term care. LTC is one of the higher-yielding monthly dividend stocks on this list at 5.7%, and demand will continue to build over the next 2 decades as more and more baby boomers age into the need for these services. Number 4. Dynex Capital. DX's market value is $597.58 million. The yield on the dividend as of December 2022 was 11.9%. Let's take a look at Dynex Capital, which, like AGNC, offers a mortgage rate. A large portion of its holdings are bonds issued by an agency and backed by mortgage from average Americans. In addition to government-backed securities, it also holds a small portion of non-agency securities. Always keep in mind that the mortgage industry has been through a roller coaster ride over the past few years. Mortgage companies suffered heavy losses and some failed entirely as borrowers rushed to lock in rates before the pandemic hit. Any mortgage rate that made it through the mayhem on the bond markets in recent years, like the one offered by Dynex, is probably going to make it through the apocalypse as well. Dynex has a juicy yield of nearly 12% and trades to a discount of 11% to book value. If the Federal Reserve keeps raising interest rates, the market could experience more swings. But if you're looking for seriously high yield, this looks like one of the best dividend stocks to buy each month. Number 5. Prospect Capital. Its market value is $3 billion. The yield on the dividend as of December 2022 was 9.3%. The shares of Prospect Capital are one option among many BDCs with a high dividend yield that pays monthly. PSEC has been traded on public markets since 2004, making it a proven survivor of the past 2 decades. Prospect Capital is cheap relative to other companies because it trades at 77% of book value. Book value is subjective, but at 23% gives us some wiggle room. Even with the most modest of assumptions, it is safe to say that a company is selling for less than its portfolio is worth. As a rule of thumb, its yield is at least 9%. When the managing team shows dedication to the company by purchasing shares with their own money, it is a positive sign of alignment of interest and commitment to the company. Over the past 2 years, PSEC's management team has purchased over 31 million shares through their own brokerage accounts, rather than through stock options or executive stock grants. John Berry, the current CEO, has a massive stake in the company, currently amounting to 69 million shares. We've now covered the best 5 stocks to buy for monthly dividends in 2023. Always do your own due diligence with research before putting your money into the stock market. Did you find this video helpful and informative? Please let us know in the comment section. Please support us by showing your appreciation for this video and giving us a big thumbs up and subscribe to our channel. Click on the notification bell and be updated on our next videos. Be up to date on everything related to crypto and finance. That is it for today's video. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.